Ladies and gentlemen, this is truly an extra important video. And why do I say that? I say that because of the simple reason. Bitcoin has broken an 11-year-long macro trend that suggested a correction downwards, and it has broken into a confirmed early bull market. Now, with an early bull market, we do have to ask some extra questions. The situation is now complicated for Bitcoin, such as if we have an early bull market, does that mean we see an early top? If we have an early bull market, does that mean the 4-year cycle is broken? What does this mean for the Bitcoin top? Where will Bitcoin go? When will Bitcoin breach all-time highs? These are all questions I'm answering to the best of my ability today. So there's a lot of content here today. There's a lot of very useful content, very useful information, and I'm very excited to present it to you guys and see what you think. Leave a like, comment, and subscribe. Let's get into it. Guys, before we get into it today, VIP group on Telegram for altcoin trading. You can check it out in the link below with a PDF of all the historical trading results and also the pricing details and information on what you're actually getting for paying for a membership. Then you can go and check out the BitGet and BingX exchanges. Very low in trading fees. Very good, very secure, right? I picked these out hand-picked. They did not reach out to me. I reached out to them for partnership, which gives an extra degree of authenticity in me advertising them, of course. Referral links are down below. And then finally, if you want to actually learn how to trade yourself, you can do so in the Become a Trader 10-unit course. Learn everything about the market for a much cheaper price and a much more extensive course than most courses out there. So go ahead and check it out. Guys, without further ado, let's get into it. Bitcoin just keeps moving upwards. Okay, and what is the reason for that? Well, one of the reasons is, I suppose, the time of the market we're in right now. We're in a halving year, and so generally in a halving year, you see upside price action. However, it's not really happening as per what it's generally done cyclically. It usually happens after the halving. Now we're actually seeing upside price action to a massive extent before the halving. We'll speak about that in a second. In fact, this whole video, as I mentioned in the introduction, is looking into the deviations we've seen from the 4-year cycle. Okay, the 4-year cycle, by the way, is not broken yet, but we are starting to deviate from some of the underlying micro trends that make up the 4-year cycle. So we need to discuss those deviations, and then we need to discuss what could happen to replace something like the 4-year cycle, or even just answering the blanket question, will the 4-year cycle break? Is it likely to break? What evidence do we have that Bitcoin will continue to make these deviations? When will Bitcoin reach an all-time high? And when will Bitcoin top out if it doesn't top out as per 4-year cycle? So lots of questions today, and they're all actually probably some of the most relevant questions you're going to find in crypto YouTube right now. Everyone is asking these questions, and not many people have the capacity to answer them to a logical and reasoned extent like I do. As you guys know, and if you don't know, well, welcome to the channel, but as you guys know on this channel, I've been discussing 4-year cycle to a very extensive, intensive degree for over 3 years, but the entire time I've been running Rules of Crypto, I've been doing it. It is the basis of my cyclical analysis. It was the basis of me calling the macro top within 3 days in 2021 and the macro bottom within a week in 2022, okay? 4-year cycle was the reason for that. 4-year cycle was also the reason we called the drop here in July 2021. We called it going upwards, and we called every single bloody move along the way, quite frankly, and you can find the track record for that in my featured homepage of all the evidence for that. 4-year cycle is major to me, and so I feel as though I am qualified more than most to speak about it in the way I'm going to speak about it today. But first and foremost, we need to understand what's happening with Bitcoin. Short-term price action has been going ballistic. Price has been rising rapidly. Bitcoin, not even on a short-term level, let's go to a daily chart. Since September, okay, and more realistically, right, since March 2023, which is the last time we actually had a structured downwards trend, okay, because we had higher highs and higher lows. We broke the low and we went downwards for a lower low. That was pretty much the last time, minus this one deviation here in January this year, where we had a structured downtrend, a structured decrease in price action, meaning that Bitcoin has not seen any bearish price action, okay, for about 1 whole year. Now that's insane. And if you're looking at something like September 11th, 2023, that's when this most recent impulse really started out. That's when we bottomed out at 24.4K and started rising really quickly to the upside. We're upwards, massively from there. In fact, we're upwards about 137% from that September 11th low. That was only 5 months ago, guys. This is how quickly Bitcoin is moving now, without stop, without break, no matter what the TA says. Okay, the fact of the matter is, the TA and as I've said over and over again, especially short-term TA, has been put on a back foot at the moment. And it's unfortunate because obviously analysts like myself love using TA to predict price action, and it still is useful to an extent, right? Because we can say, like, look, 38.5k was a TA level. We identified that level via TA. We did reject from it for a while, and then it broke to the upside. And then we retested again. Again, we retested a TA level. So it's not like TA has no usage anymore, not at all. 48k, 49k, that was a TA level. We rejected from that level very strongly. We went down to 21%. We struggled to get above it. We finally did. These are all TA levels, 53k, the same thing. So it's not like TA is useless. It's not like it doesn't work, but it certainly does work. But the difference is now, ever since September, ever since this kind of whole shift in market dynamics has changed, and the shift in attention and the shift in the leading price action, or what leads the price action, has gone from TA to ETF narratives and ETF realities. That's happened since September. And so now the short-term TA is what's really being disrupted. The macro TA and the medium-term TA, as I just showed you in those horizontal resistance and support zones, is still valid. It still works fine. But if you speak to any trader right now who's actually a trader, not a YouTube trader or a Twitter trader, someone who actually trades for charts, they will tell you outright they are not trading the short term as much as they used to right now. Okay, and they haven't been doing so since September. That's what any logical trader will tell you. I have not been trading the short term much at all since September. I've been doing long-term holding buys, okay, and swing trades. That's the only thing I can justify doing right now, because that's the only places in which the TA works. The TA works very well on medium-term and long-term timeframes currently. It's not working on short-term timeframes, and we can see that even if we zoom in right now to the 4-hourly chart, we look at what happened. Well, we broke above 53,000 US dollars. We went upwards. We found resistance at 57.5k. We formed, let's go to the hourly chart. Let's stay on the 4-hourly chart. We formed an ascending channel formation, right, at the top of a move that just never seems to stop. That should have been a reversal pattern as per TA, but I didn't even mention it in the video yesterday because I was so confident that that short-term pattern meant nothing based on months of invalidation to short-term TA. And look, I was right not to mention it because we broke it right to the upside. Now, right now on the 4-hourly chart, and by the way, guys, I did mention before the breakout the descending line on the 4-hourly chart RSI, which led to a break above 53k. I looked at that line. I said we need to watch it. I said if that broke, we'd likely break 53k. It did break, and we did break 53k, so it's a good spot by us there. But that's that same 4-hourly chart RSI, which kind of led to this trigger explosion above $53,000, has now reached a major horizontal resistance level. So look, maybe now, it's always a struggle with short-term TA right now, but I suppose now at around 59k, 60k, that level where we are currently, we should be seeing a correction here. But again, how much can we actually trust for short-term TA at this point? Not really that much. But if I'm looking at what this level is, well, I zoom back and I see over and over again on the 4-hourly chart since around December, constant rejections from this horizontal level. The thing is, short-term TA, although it's unreliable right now, we can't really throw it out the window entirely. It doesn't seem logical to do that. Maybe I'm biased in saying we shouldn't be throwing it out the window entirely. Look, maybe we should, but I'm inclined to believe as a TA analyst that TA does still matter to some extent, even though it's not reliable. It does still matter. Short-term TA I'm talking about, and we do have a resistance zone here at 86. So look, maybe we go down for a correction here. But yeah, look, I'm not confident in any scenario based on short-term TA, so it's more of a gamble scenario right now. But what I can say right now, obviously, as I said before, and we'll get into the new content in a second. We'll get into those questions I really need to answer in a second. Sorry for dragging out this context for too long here. But this entire move since September has been exacerbated very, very largely. It's gone very, very fast on cyclical level. Why has it happened? ETFs. First and foremost, the ETF narrative, which lasted until this point right here. ETFs released. We went downwards for a correction, and then the ETF buying begun. And ever since the ETF buying begun, we've been going upwards. So the narrative led to one leg, and the buying led to another leg. We can track the inflows through this website right here. And we can see that the inflows into Bitcoin ETFs, we're talking about net inflows, so you can have negative days and positive days. Generally speaking, they're positive. We've only had a few negative days. And in the last 2 days, for example, we've seen 250 million net positive inflow into ETFs, and then 232 million. And the average of a positive day so far has been around 300 to 400 million. So there's just ridiculous amounts. There's no other way to say it, really. Obscene amounts of buying coming through ETFs. And there's no wonder why the charts are being distorted right now. ETFs have just been dominating the market in that regard. But now we're going to get into, okay, sorry for that lengthy context. It was necessary to discuss, but it obviously isn't why you clicked on the video. Now we're going to get into the real meaty stuff, the real nitty gritty. This is the 4-year cycle. These are macro trends. So first and foremost, okay, we need to discuss the break of a macro trend. Okay, and this is not directly the same thing as a 4-year cycle. Here is my 4-year cycle chart so you can see it. This is a macro trend that lasted 11 years. That is a component of the 4-year cycle that is fundamental to building some of the micro trends that lie within the 4-year cycle, but it is not the same thing as the 4-year cycle. Okay, let me discuss that further in a second. But let's just understand it first, okay? We have a macro trend on Bitcoin. It is broken now, but it's worth knowing what it was and worth knowing why we're deviating from it, okay? It is broken now, but the macro trend essentially was every single cycle we have the same structure, we have the same price action, okay? That price action essentially is this. We go downwards, we reach the bull market top. We go downwards, we see a dead cat bounce. We form a dead cat bounce at this line, which is right here, this green line here and yellow line. It's 0.618 on the Fibonacci. And, you know, in 2014, it was 800 USD. In 2018, 2019, it was 14,000 USD. This cycle, it was 48,000 USD. And that is a line that after we go downwards and reach the bottom, we come upwards and we see a pre-halving correction from. Not only do we see a pre-halving correction from that yellow line and that Fibonacci rejection level, we also see that correction stem from the 67 level, right? 67 on the horizontal monthly chart RSI. Okay, a horizontal line on the monthly chart RSI at 67 cross-validates a rejection zone from Fibonacci, which happens again and again from cycle to cycle. The structure is the same, and the structure was the same, okay, up until a week ago or a few days ago, this year and this cycle, right? We did reach that yellow line on time. We did reach the same level on the monthly chart RSI, and if we were going to follow that cyclical trend, we would have seen a significant pre-halving correction that would have taken us downwards for 2 to 3 months, okay? How do I know that? How do I know it would have taken us down for 2 to 3 months? I'll tell you right now. We can see on the RSI, okay, if we look at the monthly chart RSI, we can see it takes about 1,000 days from when we originally break down from that RSI level to when we get back above it. And that rejection, okay, happens before we get back above it. So about 1,000 days, over here in 2018, the same thing. And if we were gonna, you know, take the November 2021 top as the true top in 2021, which I think it was, and then we would have rejected here, and then we would have gone downwards and broken above this level at about 1,000 days since the original breakdown, which would have been in August 2024. And so we wouldn't have seen a breakout of 53K until August 2024. And then from there, we can see historically that from the break of this Fibonacci level, it takes about 2 months to reach all-time highs on Bitcoin. 2 months here, 2 months here. If it took 2 months again from a break in August, it would have taken us to around September, October, November, December, somewhere in that time frame to reach all-time highs on Bitcoin. So basically, okay, this is all broken stuff, but I really want to dive into it. I want you to understand exactly what's happening here, right? And I understand I'm dragging this video out. I'm not doing it intentionally. I need to give you the context. I need to give you the information. It's very important, okay? So the trend was 11 years long. It suggested that Bitcoin would go downwards and correct from this level, from 53K, 49K, that level, for 2 to 3 months. And then it suggested we'd break upwards in August and we reach all-time highs by November, December, somewhere around that price region, okay? That date range, I mean, okay? That is what the existing macro trend was. Now, here's the problem. We've broken that macro trend, okay? We've broken above the rejection level and we have not seen a rejection. So this whole trend, this 11-year-long trend on Bitcoin, do you know what we can do to it? Delete. It's gone. The chart is gone. So we're going to go ahead and delete this tab. Now we're going to move into the 4-year cycle, okay? Now, I want to make something very clear. A break of the macro trend that we just looked at is not the same thing as a break of the 4-year cycle, but it is a dent in the armor, okay? So the 4-year cycle is based not on rejections before the halving like that trend was, and, you know, when Bitcoin reaches all-time highs. No, the 4-year cycle is based on tops and bottoms. Okay, and we have 5 micro trends right here, color-coded with the date range measurements, where you can go and look. You can see, for example, this micro trend, 500 days from bottom to halving in yellow. You can go to the yellow measurement line. You can see the 500-day measurement there on 3 separate occasions. The fact of the matter is we have a date range trend here, very, very strong. The strongest trend Bitcoin's ever had, the strongest trend Bitcoin probably will ever have 4-year cycle with multiple date range trends, predicting tops and bottoms exclusively. Not predicting price points, predicting tops and bottoms. When will Bitcoin top? When will Bitcoin bottom? If we are to follow the 4-year cycle, okay, Bitcoin will be topping out this bull market in October 2025. But here's the issue. Now, although that is valid, and although the 4-year cycle is still valid, the problem with the 4-year cycle now is that we have invalidated an 11-year macro trend. And since we have invalidated an 11-year macro trend based on abnormal price action triggered by ETFs most likely, who's to say we can't invalidate more 11-year macro trends? That's the issue we're facing. We're also facing another issue, okay? The 4-year cycle is intrinsically very good, very useful, but it's also very difficult to know when it's broken. Because it's only based on tops and bottoms, and because it's only based on date ranges, we won't really know whether the 4-year cycle is broken until after we see the top. And by the time we identify a break of the 4-year cycle, we could be down 50% in the market. So, you know, our identification of an invalidation to the 4-year cycle theory will happen much later than it would be profitable for us to know. So, for example, if we do go upwards, we start an early bull market, we end up topping out, say, in the end of this year instead of the end of next year, it will be impossible for us to know the 4-year cycle has been invalidated until we go downwards like 50 to 60% or more on Bitcoin, because we just simply wouldn't have any evidence. This is a date range trend based on tops and bottoms. You know, we would be saying, oh, that's a correction, don't worry, we're going to go back up. And then all of a sudden we're in a bear market and we wouldn't even know what happened. So the 4-year cycle is great. It still is the most useful thing. And it's still something I'm going to look at so much. And it's still the most reliable thing we can look at. But when we're looking into scenarios, okay, there is a scenario now that actually exists that the 4-year cycle could be wrong this cycle. Now, it's not confirmed, but the problem is it can't really be confirmed until after it's happened because of the way the 4-year cycle is formulated. It can't be confirmed until after it's happened, in which case that will be too late. So we're in a bit of an interesting situation, and it's bittersweet. I'll tell you why. It's great to see Bitcoin going upwards. It's great to see Bitcoin pumping. It's great to see Bitcoin evidently entering an early bull market, but it's also quite bad. And this is why I say it's bittersweet, because we lose the predictability. With that 11-year macro trend that I just deleted from the screen because it's invalidated, we had macro predictability. Yes, the macro predictability meant that Bitcoin would go downwards for a few months, but overall, long term, it was bullish. And predictability is what makes you money in the market. You don't make money by the price going up. You make money by the market being predictable, because that's what leads you to buy before the price goes up. Okay. And right now we're losing predictability left, right, and center. That's a concern. Now, again, one more time, the 4-year cycle is not broken. It still is valid, and we're still going to be looking at it very closely. But we do need to start putting other scenarios on the table now. What is another scenario? Okay, here's one of them, right? Because there's actually dozens I could show you. Not dozens, that's an over-exaggeration. There's probably 3 or 4 of them I can show you. But I'm going to show you one in this video just to give you a taste, okay? Because I don't think it's necessary to go too deep into it right now. So, here is an alternate scenario for Bitcoin, right? That is not the 4-year cycle. Now, the 4-year cycle, again, is not broken, but here's an alternate scenario just in case it might be. Right, it's looking at the monthly chart RSI once again. And what you can see is that it's looking at that 67 level once again, okay? And what you can see is that basically this 67 level in red on the monthly chart RSI is very important for Bitcoin. It's a breakout zone, it's a rejection zone, it's a bounce zone. If we're looking through all the data here, we can see it very clearly. This is a very important level. Now, what you'll notice is that specifically in 2016 and 2020, there are interesting data points here. From when we break 67 on the monthly chart RSI to when we top out on this yellow resistance line, this yellow descending resistance line, which marks the Bitcoin tops, it takes about 300 to 400 days, okay? So for example, we broke out of 67 in October 2016, 300 to 400 days later, in December 2017, we topped out on the bull market. Same thing happened in 2020. We broke out here in October 2020, 300 to 400 days, we reached the actual bull market top, which wasn't a rejection from this yellow RSI line, but it was the true bull market top by more than 19% on total cryptocurrency market cap. And I will measure it as the true top for that reason. That was 400 days later. If we go back to 2012, from when we broke 67 on the RSI to when we reached the true market top, it was about 488 days later. So yes, a bit more, a bit longer, but overall, I think this is something that we need to look at to an extent, because we have a trend where from when we break 67 on the monthly chart RSI, it takes, look, let's be exact with the numbers. It takes 365 to 488 days to reach the macro top, okay? So if we were to do that again, now this is a very speculative trend, as you can see, right? It's not overly convincing. I understand that, but the point is there's not really many overly convincing trends that aren't the 4-year cycle. That's the issue we're facing right now. But if we are going to take this seriously, okay, from when we break 67 on the monthly chart RSI, which is right now, it should take, let's just say 400 days. It should take 400 days for Bitcoin to see its macro top. In 400 days from now, we are in March 2025. Now, does that mean that Bitcoin will top out this cycle in March 2025? Certainly not. It doesn't mean anything, but it is an indication, right? It's one of those alternate scenarios. If the 4-year cycle is not going to work, that means, so say for example, right? Okay, here's the thing. Say hypothetically the 4-year cycle right now is broken and we just don't know it yet because we don't have the data to confirm it. Say the 4-year cycle is broken. That means there needs to be new trends that Bitcoin is going to follow for a top, okay? Bitcoin will not do something random. That's not how the markets work. Markets always follow trends. It's just about which trends they follow. So say, for example, we follow this trend here. Now, what is the supporting evidence for this trend? Well, the supporting evidence is that we have some vague resemblance in each cycle that when we break the 67 level, it takes about 300 to 400 days to reach the macro top. That's happened 3 times. It's vague. It's not precise. And if we did it again, it would take us to March 2025. That's where we'd see the macro top. The other piece of evidence is we are seeing the start of an early bull market. So with an early bull market, it stands to reason we could be seeing an early top. And March 2025 is a lot earlier than 4-year cycle's prediction of October 2025, where the top might be. Now, again, I've displayed this in a very rough way because I'm not confident in it. I don't think there's any grounds to be confident in it. And I also have many other alternate scenarios to show you. But here's the thing. I'm delivering this content the way I deliver it for a reason. I don't want to flood you with alternate scenarios because I'm not actually convinced that our main scenario, the 4-year cycle, is broken yet. As I said, it's going to be very difficult to be convinced that it's broken until we are down massively on Bitcoin. But there will be signs. There will be signs, okay? And we'll just have to monitor them and try to identify those signs as best we can. But as of right now, I do still think the 4-year cycle is the best thing we have, the most reliable thing we have. It's just not as reliable as what it was yesterday before we started breaking 11-year macro trend. So to be honest with you, as I've said, this is a bittersweet moment for crypto. Crypto is pumping massively. ETFs are pumping the price so hard. There's unfortunately other arguments to be made. There's fundamental arguments. People say the ETF is actually not as good as people think it is. People say that, like myself, for example, I would say the ETF is not actually good for Bitcoin from a fundamental perspective. I don't want hedge funds owning huge swaths of Bitcoin in circulation. Why would anyone want that? Yeah, it's good for price. Yeah, cool, we see the price go up, but what about the fundamentals? You know what I mean? There's different arguments to be made here. There's also another argument, like I said before. Awesome, the price is going upwards. What about predictability? If we're going upwards regardless of trends, that means we're breaking trends. That means we're breaking predictability. That means we don't know what's going to happen. That means we're in the dark, right? So there's counter arguments here that we need to be considering. I think it's a very low IQ monkey brain thing to say that Bitcoin going upwards only for this long is a good thing. I would say this is a net negative for Bitcoin, even though I'm making huge amounts of money. And my profits are skyrocketing. I still am not very happy about the situation for Bitcoin. I would have preferred it to follow the macro trends and go downwards and maintain predictability in a normal cycle, because if it did that, we wouldn't have to ask the question, is the 4-year cycle breaking? And if we don't have to ask that question, that means we know when Bitcoin tops. And that's a much more convenient, much more simplistic scenario. But now, unfortunately, we are in this situation where we have to start asking the question, will the 4-year cycle break? I am still inclined to say no, and I'm certainly inclined to say it is the most reliable thing we have. But look, let's put it this way. There's more uncertainty in the 4-year cycle than there was yesterday. And that's something that we need to be discussing, and we need to discuss it more in future videos. And we also need to discuss these alternative scenarios more in future videos. I will bring them up in greater detail, more convincingly as well in further videos. So guys, ultimately, sorry for all the stuttering, sorry for all the stammering in this video today. It's been kind of hard to get this one out. I'm traveling currently, and obviously, as you guys know, the most important things in your work, whatever you may do for work, tend to happen at the worst times. And so doing this while traveling is not the easiest thing to do because I haven't had huge amounts of time to analyze the markets, but I'm trying to get it out as consistently as much as possible. Please leave a like, comment, subscribe, and check out those links below for Crypto Academy, BingX, BitGet, Telegram. If you appreciate what I do here, and if you find the content useful, it really helps me out. Really appreciate it. Thank you guys. Have a good one.